Do U.S. real estate investors need Canadian registration? U.S. real estate investors regularly buy condos, rental homes, vacation properties, and commercial buildings across Canada, but owning property does not automatically mean a business is being carried on. The real question becomes, do U.S. real estate investors need to register in Canada? The answer depends on how the property is used. Passive ownership requires different obligations than active rental operations or property development. Understanding these distinctions helps U.S. investors remain compliant without unnecessary administrative burdens. Owning property alone does not require registration. A U.S. citizen or corporation can legally own Canadian real estate without registering a business in Canada. Property ownership itself is not considered carrying on business. However, tax obligations still apply. Canada taxes, rental income, capital gains, certain types of passive income. Even without business registration, investors must comply with non-resident tax rules. When registration becomes necessary, registration becomes mandatory when real estate investment evolves into a business activity. This often occurs when investors operate rental properties, hire employees or property managers, conduct short-term rentals, purchase property for resale, flipping, develop or renovate property for profit. In these cases, the investor may be considered to be carrying on business in Canada. CRA requirements for non-resident landlords. Even without formal registration, non-resident landlords must withhold and remit 25% tax on gross rental income, Part 13. File a Section 216 return to pay tax on net income. Appoint a Canadian agent if applicable. Failure to follow these rules can result in penalties or tax reassessments. Provincial business rules. Some provinces require registration for certain rental or development activities even when the federal government does not. Examples. British Columbia regulates short-term rentals strictly. Ontario may require business registration for multi-unit management. Quebec requires QST registration for certain rental operations. Provincial rules often overlap with municipal bylaws. A practical example. An American investor buys a condo in Toronto for long-term appreciation and uses it occasionally as a vacation home. No business registration is required. However, if the investor decides to turn the condo into an Airbnb, this becomes a business activity. Registration may now be required federally or provincially, and GST HST rules may apply depending on the rental structure. Final thoughts. U.S. investors do not need Canadian business registration to own property, but once rental income, development activity, or short-term rentals enter the picture, compliance obligations arise quickly. Understanding the difference between passive ownership and active business operations helps investors avoid penalties and manage Canadian real estate efficiently. If you'd like more insights delivered in the same straightforward style, you can explore our website. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.